Howdy, everybody. Welcome to Liberty Call. Today is Thursday, September 5th, 2024. Hope you're having a fantastical day out there in the interwebs. Yeah, it's been kind of a meh day here. We had clouds and rain and everything, and it was like 50 degrees when I woke up this morning, and it was quite chilly in my bedroom because all the windows were open. So anyways, it is, sun looks like the sun's starting to come out, but we've been getting a lot of rain here. So anyways, hope you're having a fantastical day out there in the interwebs. If you could do me a favor before we get started on all this amazing news we're going to share, give me some thumbs up, a like, a share, a subscribe, a follow, and press that notification bell. All right, markets, not in the best mood today. Dow Jones was down 0.54%, 219 points, closed at 4755. S&P 500 down 0.32%, 17 points, closed at 5502. NASDAQ was up 0.25%, 42 points, closed at 17,126. The VIX fell 6.8% today. It's back down to 19.87. Canada down 0.23%, Brazil up 0.27%, and Mexico down 0.11%. Headed over to Europe, Germany flat at up 0.02. The UK, UK down 0.34%, France down 0.92%, Netherlands down 0.57%. Spain was up 0.53%, Italy flat up 0.01%, Switzerland down 1.04%, and Portugal flat up 0.02%. Russian exchanges split today. MOEX up 0.72%. The RTSI down 0.15%. And the Asian markets, the Nikkei was down 1.07%. Australia up 0.4%. New Zealand up 1.25%. In China, the Shanghai was up 0.14%. Shenzhen Component up 0.28%. China A50 flat at up 0.01%. DJ Shanghai up 0.36%. Hang Seng down 0.07%. And the Taiwan weighted when it closed on the 4th was down 4.52. All righty. So those are our markets for today. Everyone feel smarter out there? Shake our heads up and down. All right, good stuff. All right, let's get into the market recap. U.S. stocks mostly lower as mixed jobs data stoke economic worries. Oh, now people are starting to worry about the economy? Not when, it's been, we've had all this inflation and all these problems created by government and the Fed, which they're like the same thing. I mean, I'm sorry. I know the Fed is a separately managed business or whatever, central bank owned by, well, they don't really tell you who it's owned by, but it's pretty much owned by the big bankers of the world. So they don't publish that information, so we really don't know. All right, let's jump into the news. U.S. stocks were mostly lower on Thursday, driven by mixed employment data that raised concerns about the strength of the economy ahead of the August non-farm payrolls report. Private payrolls increased by 99,000 in August, below economists' expectations of 144,000, and marking the weakest month for job growth since January of 21. And just wait till the revisions come in, because then it'll probably be even less. This followed a downward revision for July's total to 111,000. The weaker than expected data prompted concerns about the economy's health. Yeah, they keep coming back and revising everything down. And so, the numbers may have looked good when they came out, 3, 4, or 5 months ago, whichever month that they go back and do the revision for. And then, you go back and look at, the trailing 12 or 6 or whatever. And, it doesn't look quite as good as it did at the time of the headlines. All right, getting back in here. Meanwhile, first-time unemployment benefit claims dropped to 227,000 for the week ending August 31st, down from 232 the previous week, slightly beating forecasts. Investors are now looking towards Friday's non-farm payrolls report for further insight. The weaker jobs data has firmed up expectations for more aggressive Federal Reserve rate cuts, with a 45% chance now priced in for a 50 basis point cut next week here in September. All right. So in other news, Verizon agreed to acquire Frontier Communications for $20 billion, aiming to expand its fiber network to compete with rivals like AT&T. U.S. Steel saw a 3% rise after a major slump on Wednesday, driven by reports that President Joe Biden may block its proposed $14.9 billion takeover by Japan's Nippon Steel due to national security concerns. Joe Biden's really going to do something? I mean, the guy's drooling in his porridge. I don't think he can even tie his shoes. I mean, he's really going to be, I mean, someone in his administration may be doing it, but I don't think Joe's doing anything right now. And I mean, I don't even know if this is a real Joe. I mean, this could be a guy in a mask. I mean, you got several people on the internet seem to speculate, they got like the tall one, the one that was like walking towards the helicopter that was like much taller than what people think is normal. So anyways, get off my conspiracy soapbox. All right. In other market news, Hewlett-Packard Enterprise fell 6% on concerns over margin pressures, despite beating expectations and raising quarterly guidance. JetBlue Airways climbed over 8% after lifting its Q3 revenue guidance, and Tesla rose 4% after announcing plans to roll out its advanced driver assistance system in Europe and China by Q1 of next year. All right, so that is the news. Let's dive into some data that came out today. August ISM Non-Manufacturing Index. This report comes to us via First Trust and Mr. Nate Gurzy, economic analyst. Alrighty, activity in the U.S. service sector showed slight improvement in August, with the ISM Services Index rising marginally to 51.5 from 51.4 in July. Whew, huge improvement. However, industry growth remained mixed, with 10 out of 18 major service industries reporting growth, while 7 experienced contraction. Key indicators presented a mixed picture. The new orders index increased to a 3-month high of 53, suggesting potential future demand, while the business activity index dropped slightly to 53.3. These numbers are in line with the 2024 averages, but are lower than the stronger levels seen in 2022 and 23. Concerns over hiring persist, with the employment index staying in contraction for 6 of the past 9 months. Many service companies have implemented hiring freezes or have stopped replacing employees who leave, reflecting caution in the face of slowing activity. Despite the signs of deceleration, inflation remains a dominant issue. The prices paid index rose to 57.3 in August, the highest of any category in the report, with 13 of 18 industries experiencing rising costs. So inflation is still a problem. Inflation in the service sector has been a key driver of overall price increases over the past 2 years. In employment news, initial job, well, we already covered that in the previous article. So we will call that one a day right there. All right, you got an article here from Zero Hedge. Oil slides despite huge draw, sending total U.S. crude inventories to 2024 low. All right, oil prices fell to 2024 lows, despite reports denying OPEC Plus plans to increase output in October and a significant crude oil draw. The U.S. Department of Energy confirmed a 6.873 million barrel draw in crude oil for the past week, following American Petroleum Institute report of a 7.4 million barrel draw. This marks the 9th weekly decline in U.S. crude stocks in the past 10 weeks, pushing total U.S. crude inventories to their lowest levels since January. Meanwhile, gasoline inventories rose by 848,000 barrels, reversing 3 weeks of declines, while distillates saw a modest 371,000 barrel draw. Most concerning data point is the continued depletion of Cushing, Oklahoma's crude oil stocks, which are approaching a critical 20 million barrel level, widely considered tank bottoms. The draw comes as U.S. crude production remains at record highs despite declining oil rigs. Additionally, the Biden administration added 1.8 million barrels to the Strategic Petroleum Reserve, marking the largest increase since June of 2020. Is 1.8 million that much? I mean, we go through about 20 million barrels a day here in the U.S. So, I mean, what is that? A tenth of 1 day's worth of oil? Despite the significant inventory declines and potential risks of hitting tank bottoms, oil prices continue to drop, driven by aggressive short selling. However, the ongoing depletion of inventories could lead to a physical oil crisis, particularly if demand remains stable or rises. Well, if the economy goes into the crapper, I think oil demand will probably ease up a little bit. But why are we exporting if we need to build up our own reserves here? Just dump it back into the SPR. Granted, the government has to buy it from the people pumping it out of the ground, but that's another issue. All right, one last article from our friends over at the Mises Institute. The regime's war on cash could destroy the economy, and this was written by Frank Shostak. So let's see here. All right, Mr. Shostak argues that against the removal of cash from the economy, emphasizing its crucial role as a medium of exchange that supports the market economy. According to proponents, of eliminating cash. Doing so would reduce tax evasion and stabilize the economy during recessions by preventing runs on cash. Well, I'm in favor of tax evasion and the black market because unfortunately the government makes everything illegal. And screwing the federal government out of tax revenue I am for it personally. However, Shostak contends that money emerged historically as a solution to the inefficiencies of barter becoming the universally accepted medium of exchange. This process cannot be replaced or dictated by government mandates. And just a sidebar here, money and currency are two different things. Money has tangible value, like, I don't know, what's on my desk here? A phone. A phone could be used as money. So, I want to trade, say this phone's worth $1,000 in, dollar value, and there's something else that's of equal value, and I could say, hey, you want my phone? I'll take your widgets. So essentially, that's the difference. Currency is fiat, which is not backed by anything. So back in the old days when we had, our dollars and our paper greenbacks, they were, silver or gold certificates, and you could exchange them for the actual species metals. So anyways, a little learning there, folks. All right, he explains that money must originate as a commodity with intrinsic value, just what I just said, such as gold, and only later take on the form of coins, notes, and electronic transfers. Digital currencies or electronic transactions, Shostak argues, do not replace cash. They simply represent alternative methods of transferring existing money. The essential role of cash in the economy is to enable these transfers, not to be replaced by them. He also warns that eliminating cash could lead to the collapse of the market economy by removing the medium of exchange that enables efficient trade. Instead of solving tax evasion and economic instability, such a move could undermine the foundations of commerce. He concludes that cash is integral to economic exchange and removing it would harm the economy. Totally agree. So we shall see what happens there. All right. Well, that's everything that I had for today. So if anyone needs anything from me, say you want to get your financial planning done, say you're changing jobs and you need to move your 401k to an IRA or evaluate your new company's plan, give me a buzz. I'd be happy to help. And you can go to dsafinancialgroup.com. Yes, that's where all your financial planning needs can be addressed. All right. Well, that's everything that I had for today. If anyone needs anything from me, like I said, go to the website. Otherwise, have a fantastical evening, and I'll talk to all y'all again next time. Adios.